Hi there, thanks for clicking on this video. I'm going to be taking you through exactly what we mean by the word stocks and shares, so let's get right into it. So the first thing to say is that a stock is the same thing as a share, and these two words can be used interchangeably. And when we buy a share, we're actually buying some equity in a company or a business. And what equity is the difference between a company's assets, which are generally speaking things that put money in the business's pocket or have value. And from this, we take away the business's liabilities, which are generally speaking things that take money out of the business's pocket. And so by subtracting these two things, we can get the equity. So in this example, if the total asset value is £1 million and the total value of all the business's liabilities is £600,000, then the total equity is £400,000. Now, in order for someone to be able to buy or sell a company's stock, the company must be publicly traded and they must have done what's called going public. And when this happens, a company can decide how much of their equity they want to sell to the public stock market. So, for example, they may choose to sell 20% of the equity in their business. And from this same example, that 20% equity of £400,000 is valued at £80,000. And so, in going public and selling 20% of the equity of a business, the business can profit from this sale and gain £80,000. So typically smaller businesses will use this as a means to raise finance in order to help the business grow. It's important to note that once a business has gone public, every trade in their stock thereafter does not go directly to the business. At that point, money is exchanged between the party selling a stock and the party buying the stock. No money goes directly to the company whose stock you're buying. So let's talk a little bit more about when a business goes public. So as I said, they can choose how much of their equity they want to sell to the market, but they can also choose the number of shares they want to use to sell this to the market. So for example, they may wish to sell 100 shares or they may wish to sell 1,000 shares. Now, as the value of the equity is fixed, this means that depending on how many shares will be released, the value of each share will be different in each scenario. So in the case where 100 shares are released to be publicly traded, each share will be worth £800 to make up the value of the 20% equity. Or if 1,000 shares are released, then each share will be worth £80 at the time of going public. And this is important to note because it demonstrates how the number of shares can affect a share price. And companies sometimes use this in what are called corporate buybacks. So in a corporate buyback, a company may buy back some of its publicly traded stocks. And so in doing this, they're reducing the number of shares out there to be publicly bought and sold, and so they're raising the value of these shares. Understandably, this is a decision that makes shareholders very happy. And the last thing I want to mention in this video is a couple of ways in which a company's share price can be affected. Now, obviously, there are far more things that can affect a company's share price, but I just want to demonstrate what happens when a company's asset column and their liability column changes. In the current climate, lots of businesses have a reduced income stream and their asset column is smaller. At the same time, their liabilities column is often increasing as the company may be taking on government loans to support their business or other sources of liability. And so if we take this same example that we used earlier to explain equity, the company's asset column may be reduced to £800,000 and their liability column may increase to £750,000. And in this case, the equity in this company is going to be dramatically reduced, and so too will the value of all of their shares. I hope that was helpful as an introduction to what we mean by stocks and shares. If you enjoyed the video, please consider subscribing to this channel as I'll be making more videos just like this. And if anything wasn't clear, please let me know in the comment section down below and I'll try to either explain it or make another video. Thank you very much for watching.